Hello everyone, welcome to the Tim Booker channel. Wishing you all a pleasant listening experience. Today, the book I'll be interpreting for you is The Middleman Economy. So, what exactly is a middleman? A middleman is a professional who connects buyers and sellers. It goes by a more familiar name, an intermediary. In our daily lives, we encounter typical middlemen like real estate agents, headhunters, insurance agents, and many other professions that fulfill intermediary roles. For instance, wedding planners act as intermediaries between couples and flower shops, gift stores, and cake shops. The trending live stream hosts and beauty influencers serve as intermediaries between consumers and various snack or cosmetic brands. According to the author's definition in this book, anyone who isn't selling self-made products or engaging in wholesale and retail with markup falls under the category of middlemen. This includes the multitude of small sellers on e-commerce platforms. When we take a taxi, order takeout, or book flights and hotels before traveling, there's an app for everything, and they all serve as middlemen. People are surrounded by middlemen, often without even realizing it. The middleman economy is everywhere. Sociologists are highly interested in the topic of the middleman economy. Many of them have extensively studied various aspects of how middlemen provide value and profit from both buyers and sellers. This book's author, Marina Krakovsky, is a renowned journalist from Silicon Valley, primarily focused on writing about social sciences and keeping up with the latest research in psychology, sociology, and economics. In her work, she delved into numerous theoretical studies about the middleman economy. Inspired by these theories, she summarized the mindset and skills required to become a top-notch middleman, leading to the creation of the middleman economy. Now, I will interpret this book for you through two questions. First, why are middlemen important? Second, how can one become an excellent middleman? Let's begin with the first question, why are middlemen important? Many people frown upon hearing the term middleman. They believe that middlemen don't create new value. Instead, they merely facilitate transactions and charge substantial markups or commissions. Words like broker, often used to describe middlemen, often carry a negative connotation. However, the author argues that the role of middlemen is far from being so simple. In fact, they play at least 6 distinct roles in this process, such as bridging gaps, certifying quality, enforcing transaction standards, assuming risks, filtering information, and acting as intermediaries that allow buyers and sellers to avoid direct interaction. In the book, these 6 different roles highlight the importance of middlemen in 3 main ways. Firstly, the presence of middlemen shortens the distance between buyers and sellers. This distance includes physical distance, social distance, and time differences. Shortening physical distance is easy to understand and is, in fact, the origin of this ancient profession. For example, in history, China had silk and porcelain, but the Western world did not. It was merchants who traveled along the Silk Road, overcoming geographical differences, who brought these products to the West. It was the presence of middlemen that transformed silk and porcelain, commonplace in China, into luxury items in the West. Middlemen bridged the gap created by geographical differences, making products realize or even exceed their inherent value. As technology advanced, trains, ships, and airplanes made transportation faster, cheaper, and safer, shortening physical distances. However, social distances have not necessarily decreased. Many times, people are physically close but have no social interaction. Some work in the same company but have no dealings with each other. For example, if you work in the finance department, you may not be familiar with people from the marketing or sales departments. Perhaps you know 1 or 2 individuals, but it's challenging to access internal information from other departments. This is what's known as a social circle, where people within the same circle have similar information, but there is minimal interaction or information exchange between different circles. People tend to stay within their own circles. For instance, entrepreneurs and investors belong to 2 entirely different circles. Many entrepreneurs are young individuals who have recently graduated from college and love to meet in coffee shops to discuss ideas. Investors, on the other hand, are often wealthy individuals in their 40s or 50s who frequent elite clubs. Their social circles have little overlap. Even when brought together physically, they struggle to integrate. For example, a venture capitalist named Nuzad once invited young entrepreneurs to a cocktail party. Despite their physical proximity, they formed 2 distinct groups. The young entrepreneurs, dressed casually, stuck together like high school cliques, even though many of them didn't know each other. In contrast, the older venture capitalists, elegantly dressed, naturally sat together and discussed business. This is where middlemen come in to strengthen connections between these circles. They bridge different social circles, passing on useful information, connecting startups with potential investors, and providing value to both sides. In Silicon Valley, Y Combinator, YC, often referred to as the godfather of startups, has helped hundreds of startups accumulate over $1 billion in investments. In addition to bridging physical and social distances, middlemen also eliminate time differences. For example, if you're moving on a Saturday and have an old refrigerator you can't take with you, you urgently want to get rid of it. You post it online on a platform for second-hand items, but there may not be an immediate buyer. To sell it quickly, you might lower the price from its actual value. However, when you move into your new home on Monday, you realize you need a second-hand sofa. You post a request on the same second-hand item platform, but there might not be an immediate seller. In this situation, a middleman can step in. They are willing to purchase your item at a reasonable price whenever you want to sell, and they have items available for you to choose from whenever you want to buy. Would you consider doing business with them? Most likely, yes. The presence of middlemen eliminates time differences. They connect sellers who are moving on Saturday with buyers who may only need items on Monday, providing liquidity for both parties. In this process, middlemen also take on some risk. For instance, let's say that in 1 week, a middleman buys 5 washing machines at $350 each but fails to sell them for a month. During this time, the middleman ties up a significant amount of capital in inventory. To clear the stock quickly, they decide to sell them for $280 each, absorbing the price difference as a loss. Of course, compared to buying or selling real estate, middlemen usually have the ability to absorb such risks because they constantly monitor the market. If they lose a bit in one transaction, they can make it up in the next one. Their high-frequency buying and selling provide them with opportunities to compensate for occasional losses. Shortening the distance between buyers and sellers is the first aspect of the importance of middlemen. The importance of middlemen is also evident in their role as trusted third parties. When people engage in transactions with strangers, how can they ensure they have enough information and are paying a fair price for the right product? How can they be sure that after making a payment, the other party will still provide the promised service? This is precisely where middlemen come in. Middlemen reduce information asymmetry between both parties and ensure the quality of traded products or services through their professional knowledge. For example, when an investor wants to invest in a startup company, but there are countless startups to choose from, how can they distinguish between a genuine opportunity and a potential scam? This is where middlemen apply their expertise to screen and conduct background checks. Only startups meeting specific criteria are recommended by middlemen and presented to venture capitalists. Middlemen also disclose the information they obtain as comprehensively as possible to the investors. This process is somewhat analogous to oysters and pearls. Investors only want to see oysters with actual pearls, and then they decide which oyster to buy. However, the laborious work of fishing for oysters, opening each one to check for pearls, and cleaning the ones containing pearls is all carried out by middlemen. They use their professional knowledge to ensure the quality of products or services, save time for buyers, and reduce the risk of being deceived by sellers. As a trusted third party, middlemen can also regulate the behavior of both parties in a transaction. The author mentions an example of a company called OpenTable, which specializes in providing restaurant reservation services to consumers. After each consumer makes a reservation through this company, and upon dining at the restaurant, the company receives a commission from the restaurant. If the reservation is successful, the consumer avoids waiting and can dine promptly. This is a form of control that the company exerts over the restaurant. However, if consumers fail to show up for their reservations, it can result in losses for the restaurant. OpenTable found a solution by implementing rules for consumers. The system doesn't allow consumers to make multiple restaurant reservations for the same time slot. Additionally, the company sends text reminders to consumers the day before their dining reservation. These reminders prompt those who have decided not to go but are too lazy or forgetful to cancel their reservations to do so in advance. As a result, the number of consumer no-shows significantly decreased. The importance of middlemen is also evident in the third aspect, which is their ability to isolate buyers from sellers, facilitating more effective negotiations. For example, suppose you have a car you want to sell, and your expectation is to sell it for $60,000. However, a friend offers to buy it for $40,000. You might not want to sell it to them because your desired price is higher, but you also don't want to engage in price negotiations with a friend, fearing that it might harm your relationship. In contrast, selling the car to a used car dealer may be a better choice because you can negotiate freely without concerns about personal relationships, striving to secure the maximum benefit for yourself. The role of middlemen is even more pronounced in the case of celebrities. Most celebrities have dedicated agents or managers who handle negotiations and contracts on their behalf. While celebrities are undoubtedly busy, the primary reason for having agents is to avoid the awkwardness of negotiating themselves. The author mentions an example of an agent named Rosenhaus, who specializes in representing professional athletes and negotiating contracts with sports teams. If a team's offer doesn't meet the athlete's desired price, Rosenhaus tells the team representative, "You're in trouble. I'm hanging up now." After hanging up, he immediately calls another team. Imagine an athlete saying something similar. It would undoubtedly damage both the athlete's image and their relationship with the team. In summary, middlemen act as intermediaries, providing convenience to both buyers and sellers, while also pursuing their own interests. This concludes the first part of the content, highlighting the importance of middlemen in three key aspects. 1. Shortening the distance between buyers and sellers, including physical distance, social distance, and time differences. 2. Providing assurances to both parties and regulating their behavior. And 3. Isolating buyers and sellers, allowing them to negotiate more effectively. Now that we understand the importance of middlemen, how can one become a top-notch middleman? This brings us to the second issue we're discussing. The author believes that a good middleman must possess two key qualities: warmth and capability. Being warm and enthusiastic without the necessary skills makes one more like a small pet, relying on a friendly attitude to please people but not sustaining a lasting business. For instance, if you plan to travel and the staff at your travel agency is warm and accommodating, but the travel itinerary they recommend fails to meet your expectations, you won't make a booking with them. On the other hand, if a person is highly capable but greedy, they resemble a predator, which can be harmful not only to customers but also to society. Examples include promoters who hide compulsory shopping in travel packages or loan brokers trying to sell high-interest loans to college students. A good middleman needs to be warm and friendly like a friend when dealing with customers, willing to collaborate, and possess the ability to achieve objectives. Interestingly, being selfless is not a required trait for a middleman. Being interested in mutual benefits and willing to gain profits under a win-win situation is the premise for friendly cooperation. However, having these qualities alone is not sufficient to become a top-notch middleman. To become one, the author provides several pieces of advice, which can be summarized into 4 main points. 1. Starting from scratch. If you're starting as a middleman from scratch, the most important thing to learn is to give, make friends, and accept some losses. This is crucial but also challenging for many people. It can feel awkward to make friends with your potential customers because it may seem like you're taking advantage of them when the essence of the relationship is to earn money. Overcoming this psychological barrier can be difficult. Borrowing from the practice of Nuzad, a middleman specializing in connecting investors and startup companies, it might be helpful. He doesn't distinctly separate his personal social network from his professional one. His colleagues, business partners, people he knows in his personal life, all consider him a friend. And friends help each other. Nuzad bridges connections, dedicates his time, and, when startups face difficulties, goes out of his way to assist them. Because he's consistently done this, he's built a reputation as an honest, generous person. Once such a reputation spreads, many investors and startups proactively approach him. In addition to emotional investment and selfless help, middlemen starting from scratch also need to invest costs to attract one side of the customers by offering subsidies. 2. Understanding customer needs. Why do customers turn to middlemen? What are their needs? These are the aspects middlemen must understand thoroughly when interacting with customers. For instance, when a couple is seeking a wedding planner, they're essentially saying that they find every detail of wedding preparation too cumbersome and they want help. If the wedding planner asks them about every detail from the overall wedding day process to the style of bouquet and the size of the cake, the customers might feel overwhelmed and wonder why they're paying for the service if they have to be involved in every decision. Customers want to reduce decision-making when working with middlemen, so middlemen should invest time and effort in figuring out how to save customers time, sparing them from unnecessary choices. 3. Cross-subsidization to attract customers. When starting from scratch, middlemen often need to apply the strategy of cross-subsidization to gain customers. This means offering subsidies to one side of the customers, which attracts them to join the network. With a large user base, the other side of the customers becomes more interested, creating value for the subsidies offered. This is a strategy widely used by many internet platforms. For instance, ride-hailing and food delivery apps often provide cash incentives to attract drivers or customers to join their network. As one side of the network grows, it becomes more attractive to the other side, resulting in more participants. This positive feedback loop drives rapid user growth until it reaches a critical mass. 4. Efficiently meeting customer needs. A good middleman should invest time and energy in researching how to better save customers time and reduce the need for them to make unnecessary decisions. Understanding customer needs is key in this regard. For example, Rosenhaus, the sports agent mentioned earlier, knew that his athlete clients wanted an agent who wasn't afraid of public opinion. So, he played the role of a tough negotiator, convincing team owners and managers that he would fight aggressively for the athletes, securing them the best contracts. These recommendations, when applied effectively, can help individuals become top-notch middlemen, connecting buyers and sellers while providing value to both parties in the process. The third piece of advice for excelling as a middleman is to rely on professionalism and high credibility. When working as a middleman, people often think they need to know more people and build a broader network to gain more business opportunities. However, the author believes this perspective is reversed and misguided. Successful individuals are not successful because of their connections with people with broad networks but rather because of their own capabilities, which enable them to establish relationships with those who have extensive networks. In other words, the better they perform in their work, the better their relationships within their network become, and the higher the quality of clients they attract, creating a virtuous cycle. Therefore, the two most important aspects of excelling as a middleman are professionalism and a strong reputation. Let's start with professionalism. The author suggests that successful middlemen should avoid becoming a jack of all trades because breadth can hinder depth. Middlemen should choose a specific professional field in which they are competitive and delve deep into it. For example, there is an individual named Robert who is the head of a recruitment company. Each year, he is responsible for filling 150 job positions, but his scope is very narrow, focusing only on recruiting individuals in the retail goods industry, such as products, clothing, and shampoo. This is because Robert's first job was at Johnson & Johnson, where he gained extensive experience in the retail goods industry. He has spent over a decade deeply rooted in the retail goods industry, with connections throughout purchasers, distributors, and agents. Whenever a job vacancy arises in a retail goods company, he can quickly find the right candidate. Due to Robert's specialization, everyone in his industry knows that he's the right person to contact when hiring a sales manager. High professionalism earns people a good reputation, which, in turn, allows middlemen to save more costs. However, can Robert find a sales manager for a low-yield industry? Of course, he can, but it might take him 100 hours, whereas in the retail goods field, it only takes him 10 hours. Time has its own cost, and those 100 hours could be better spent on what he excels at. Therefore, Robert often refuses requests outside of his professional field without hesitation. People prefer professionals when seeking services, just as they prefer high-reputation sellers when making purchases. In e-commerce, for instance, a seller's reputation is a critical factor influencing a buyer's willingness to transact. Many buyers examine a seller's reputation score and even read negative reviews when shopping online. To build and maintain a good reputation, the author suggests that middlemen should approach every transaction with dedication and avoid seeking quick profits. A model agent named Simon, for example, spent many years building his reputation. In the first year of operating his model agency, he earned only $2,000, and the second year brought in a bit more, around $5,000, just enough to make ends meet. He focused on selecting models carefully and ensuring that the opportunities he secured for them were the best possible. Simon's dedication to his work and models, over time, allowed him to accumulate a strong reputation. In terms of reputation maintenance, middlemen should refrain from recommending products or services they don't understand well. Rushed recommendations can damage one's reputation, making it difficult to rebuild. The fourth piece of advice for becoming a successful middleman is to actively safeguard the interests of both buyers and sellers. Many middlemen, in the process of transactions, unintentionally favor the party that provides more stable profits. For instance, model agents are often caught in such situations, as they serve both models and clients, such as photographers, film producers, and advertisers. Their primary responsibility is to find suitable models for their clients within their budget. However, they also need to negotiate on behalf of models to secure income that aligns with the time and exposure they invest. In the current business environment, clients tend to hold a stronger bargaining position while models are relatively disadvantaged. Consequently, many model agencies lean toward protecting the interests of their clients and tolerate some unfair practices. However, the head of a top model agency, Adams, doesn't approve of this approach. He believes that a good model agency should safeguard the interests of both parties, ensuring that the business thrives in the long run. Adams acts as a representative for both sides. He strives to meet his clients' external appearance requirements while making sure the models receive fair compensation. By prioritizing the interests of both parties, Adams attracts the best models, which in turn attracts high-quality clients. Clients who adhere to the model agency's professional standards benefit both the agency and the models. In conclusion, to become an outstanding middleman, one needs to be warm, friendly, cooperative, and willing to collaborate while also possessing the intention to achieve cooperation. The author has provided 4 key pieces of advice for excelling as a middleman. 1. For those starting from scratch, learn to give, help others, and employ cross-subsidization to accumulate a customer base. 2. Understand customer needs accurately. 3. Establish a strong reputation by approaching every transaction with dedication and professionalism. 4. Actively safeguard the interests of both buyers and sellers to ensure long-term success in business. If you are a buyer or a seller, I hope that by understanding this book, you will know how to deal with intermediaries more effectively. If you are an intermediary and want to excel in your work, I hope that the advice mentioned in the book will be helpful to you. Alright, the Middleman Economy has been interpreted for you up to this point. Congratulations on completing another book. Thank you all for your support and attention. Please subscribe to the Tim Booker channel, like, and share this valuable knowledge with your friends. Let's combine wisdom with practice, achieve our financial goals, and create a better future together. Thank you, and goodbye.